Index funds versus ETFs. What's the difference? Do you want to build wealth but you're stuck between choosing index funds or ETFs? You're not alone. These two investment options often get mixed up, but here's the catch. They could mean the difference between success and missed opportunities. You've probably heard both terms tossed around, but do you really understand what each one means? And, more importantly, how they can shape your financial future? Stay tuned, because today I'm breaking down the key differences between index funds and ETFs, and by the end, you'll know exactly which one is right for you. Let's get into it, because this choice could be a game changer. The confusion around index funds and ETFs. Here's the problem. Index funds and ETFs are often thrown around as if they're the same thing, and it's easy to get lost in the jargon. People hear these terms and think, wait, they sound the same. What's the real difference? And I get it. The last thing you want is to invest your hard-earned money into something that doesn't align with your goals, especially if you're just starting out. Let's face it, financial literacy can be overwhelming, and if you don't understand these concepts, you're leaving your money at risk. But what if you had the clarity to make the right decision? Imagine this like picking a sports team. You wouldn't pick a team you didn't understand, right? Well, today we're going to make sure you pick the winning team for your money. Now, let's dive into the meat of it. First, let's break down index funds and what makes them so popular among investors. Understanding the basics of index funds. Point 1. What are index funds? Let's start with index funds. At its core, an index fund is a type of mutual fund that's designed to track the performance of a specific market index, like the S&P 500. This means when you invest in an index fund, you're essentially buying a tiny piece of every company in that index. Think of it as a low-cost, automatic way to diversify. Instead of picking individual stocks, you're buying a broad basket of stocks from a particular index, which can help reduce risk. It's like the buffet of investing. You don't have to pick just one dish. You get a little bit of everything, and it's all cooked to perfection. But what makes them so attractive? And how do they stack up against ETFs? Let's break it down. Point 2. What are ETFs? Now, let's talk about ETFs, or exchange-traded funds. The key difference here is that ETFs are like a hybrid of an index fund and individual stocks. They're traded on exchanges just like stocks, but they hold a collection of assets similar to index funds. The main difference? ETFs are much more flexible. You can buy and sell ETFs throughout the day, just like individual stocks. This gives you more control, but it also comes with a bit more complexity compared to index funds, which only trade once a day at market close. Think of it like the difference between shopping at a mall, ETFs, versus shopping online, index funds. One's immediate and hands-on. The other's a little more laid-back and passive. But flexibility is just one factor. How about fees and cost structure? That's where the real differences start to emerge. Fees, flexibility, and more. Point 3, fees and costs. Let's talk about the all-important question. How much will this cost you? When it comes to fees, index funds typically have lower expense ratios compared to actively managed mutual funds. But here's the kicker. ETFs are generally even cheaper when it comes to trading costs and management fees. So if you're looking to keep fees low, ETFs could be your best friend. But hey, we all know that sometimes a cheap deal isn't always the best. Make sure you're not sacrificing quality for the sake of a dollar. Now, let's talk about diversification, because this is one area where both index funds and ETFs really shine. Point 4, diversification. Both index funds and ETFs give you instant diversification, but the difference lies in how they manage it. Index funds track a specific index, meaning they're heavily focused on one particular market. ETFs, on the other hand, allow you to pick from a wide range of sectors or even international markets. So if you're someone who wants to diversify globally or add more specific sectors to your portfolio, ETFs give you that flexibility. Think of it like a menu at a restaurant. With index funds, you're going to a set menu. With ETFs, you're at a buffet, and you can choose from a wider variety of choices. Next up, let's explore one of the most important factors when it comes to investing: tax efficiency. Point 5, tax efficiency. When it comes to tax efficiency, ETFs have the upper hand. Due to their structure, they're more tax efficient compared to index funds. This means that you'll likely pay fewer capital gains taxes on your ETF investments over time. So, if taxes are something you're thinking about long-term, ETFs could help you keep more of your money working for you. Of course, both options are tax efficient compared to other types of funds, but the differences could add up over time. Now that we know the key differences, let's get into the real-life scenarios where one might be better than the other. Which one is right for you? Point 6. When to choose index funds. Here's the deal. Index funds are great if you want a simple, long-term investment strategy with low fees and low maintenance. They're perfect for beginners who don't want to worry about trading every day, and they're an excellent choice if you're planning to buy and hold for years. If you're the type of person who wants to set it and forget it, index funds might be your best option. Kind of like buying a plant. You water it once and you let it grow. Maybe add a little sunlight along the way. No daily maintenance needed. On the flip side, what if you want more control over your investments? Point 7. When to choose ETFs. ETFs are perfect if you want more control, flexibility, and potentially lower costs on a per-trade basis. They're great for people who are comfortable with trading and want the ability to buy and sell throughout the day. If you like to be more hands-on with your investments, ETFs are a great choice. Plus, you get access to more niche markets and sectors that may align with your financial goals. ETFs are like the cool, sophisticated cousin who knows all the trends, while index funds are the reliable, steady friend you can always count on. So, which one should you choose? Let's wrap up with a quick review. Whether you go with an index fund or an ETF, the most important thing is that you start investing. The key is to align your choice with your personal goals, whether that's simplicity, tax efficiency, flexibility, or low-cost investing. Remember, investing isn't about making a perfect choice. It's about getting started, being consistent, and letting time do the hard work. Hit that like button if you're ready to make your move, and don't forget to subscribe for more investment tips to help you build the life you've always dreamed of. Thanks for watching, and I'll see you in the next video.